It's time now for an in-depth look at the market news today, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for coming on today.
Thank you for having me today.
So the Fed lowering rates by 25 basis points. This is just 2 months since the last cut. Why, and what reaction was there in the markets today?
Yes, as you said, the central bank announced that it is taking down its benchmark overnight lending rates to target range of 1.75 to 2%, cutting by 0.25 percentage point. There have been some arguments in terms of whether the Fed were able to cut the interest rate because the inflation number, particularly the core inflation numbers, were jumping up to 2.4% rate, as well as the domestic sales numbers were coming in very strongly, above the expectation by almost twice the number of expectations. So all that was putting some negativity whether or not the Fed was able to cut the interest rate. But luckily, Fed was able to cut the rate by 0.25%. According to the Fed's dot plot of individual expectations, 5 members thought that FOMC should held its previous range of 2 to 2.25%, and 5 approved the 25 basis point cuts, and 7 favored at least one more cut this year. So all in all, it seems that the split between Fed members in terms of whether continuation of additional cut will be needed or not. In any case, Fed Chairman Jerome Powell seems to be maneuvering the market quite well and saying that if necessity rises due to the U.S.-China trade dispute, then they will act quite aggressively if things are needed. But for the time being, it seems that the overall numbers seem to be fairly stable. Therefore, he doesn't think that additional cut might not be needed in the future. So in any case, because of that, the market seems to be kind of muted in terms of the reaction.
Yeah, muted is what it looked like on Wall Street Wednesday. Stocks were mixed there. Asian markets today are a bit higher, including Korea's. Take us through the action there.
Sure. In terms of Japanese market, it paired quite a bit of gain, and the yen climbed after the Bank of Japan left the policy setting unchanged, which is indicating that Japanese economy seems to be fairly stable. However, the Australian dollar slumped after the unemployment ratios were rising. That kind of put some pressures. And also U.S. Stock futures retreated somewhat, and that kind of resulted into some of the negativities in terms of Hong Kong shares. But the overall Chinese market did recover somewhat by somewhere between 0.4% or so. This seems to indicate that in terms of their concern about the Chinese economy, and the Li Keqiang was saying that there is a possibility that the 6% target will be very difficult to achieve, despite all those news, that the Chinese market seems to be quite resilient, and meaning that most of these major economies, central banks are ready to react and put actions to provide additional liquidity if things are needed. So most of the people are expecting the policies to be quite favorable to the equity market trend, but there's still concerns about the economic slowdown in global arena.
Got it. Well, quickly looking at the Korean currency, it started to gain strength recently. We talked about maybe it going back to 1140 against the U.S. dollar or something like that, but now it's weakened again. There's also tensions in the Middle East. Where do you see the Korean currency going? Right.
In terms of the Korean won kind of depreciating slightly again, is all due because of the U.S. rate cut relation. And U.S. has been saying that they cut the interest rate, but maybe additional cut might not be needed. That is affecting negatively in terms of the currency movement. So the dollars are not weakening that much, and that's the reason why the Korean won was depreciating somewhat. But however, though, we think that the trend is already set. The U.S. have cut the interest rate by twice, which is similar speed or a little bit faster speed than other countries. And because of this, we think that the U.S. dollar's rate is not going to continue to go up, but rather depreciate slightly in the future, which will affect positively in terms of the Korean won appreciation. So volatility will be still there because of the sharp drop of the export growth rate. But nevertheless, the economy is growing at a reasonably above 2% rate, and some of the positive news will be coming in terms of the boosting measure by the Korean government, including the rate cut as well as the fiscal policies. So we think that the exchange rate should remain into the trend of appreciation in the future.
All right, Mr. Yu, that's where we'll have to leave it for now. Thanks for sharing your insights today.
Thank you very much for having me.